Bridget Hogg, and I'm a senior.
I'm Graham Heck, and I'm a senior.
I'm Liz Hicks, and I'm a junior.
I'm Mitch, Holland, and I'm a sophomore.
And I'm Johnny, and I'm a senior.
Hello again, and welcome to another exciting episode of Investigative Accounting Journalism, the show that combines everybody's favorite two things, accounting and gotcha journalism. On this week's episode, we will be diving in to the financial records of the popular entertainment company SeaWorld. SeaWorld is a United States chain of marine mammal parks, oceanariums, and animal theme parks owned by SeaWorld Entertainment. It has 3 locations, Orlando, San Antonio, and San Diego. Now over to my co-anchor, Bridget Hogg, with some more background info.
Thanks, Erica. According to a 2013 article in the Chicago Tribune, SeaWorld stock has fallen 22% over the past year. This can most likely be credited to the effects of the 2013 release of the documentary Blackfish, which brought to light the unethical treatment of killer whales under the hand of SeaWorld employees. SeaWorld, of course, denied everything, but they can't deny the dramatic decrease in their stock. Let's see how this stock plummet was affected. SeaWorld's financial statements. SeaWorld's fiscal year ends on December 31st, 2013, so we'll start there. Now over to our revenue and income analyst, Graham Heck.
Thanks, Bridget. According to SeaWorld's Form 10K, in 2013, its total revenue was $1.46 billion. That amount increased drastically compared to 2012, when it was $1.42 billion. For our new viewers joining us tonight, a quick definition of total revenue would be the total sales and other revenue this company has generated in their fiscal year. So SeaWorld had quite an increase in the revenue, but when we take a look at SeaWorld's total income, we can see they took a little bit of a hit. In 2012, their net income was $77.4 million, but in 2013 it dropped to about $20 million to $50 million. We know that net income is what remains after subtracting all the costs from a company's revenues. In my professional analytical opinion, this decrease in net income may have something to do with the public's reaction to Blackfish. Now, our investigation will turn to the balance sheets with our balance sheet expert, Liz Hicks.
Thanks, Graham. As we all know, current assets are items which equal the sum of cash and cash equivalents. In other words, assets are things that are easily liquidated that can be converted to cash in less than 1 year. SeaWorld's balance sheet showed us that in 2013, their current total assets are $243,059,000. When we checked their accounts receivable, we saw the balance was $41,509,000. Digging deeper, we found that SeaWorld does not record an allowance for estimated uncollectibles receivable. For all periods presented, the allowance for uncollectible accounts and the related provisions were insignificant. What this means is that from last year to this year, both the revenue and the accounts receivable were flat. Tune in next week's episode to see SeaWorld's next move in settling those uncollectible funds in the T-charts. Now we'll go to our field reporter, Mitch Holland, who will give us a little insight into SeaWorld's inventories and accounting policies.
Thanks, Liz. Checking into SeaWorld's inventory showed us that all its inventory is worth $36,209,000. SeaWorld's 10K states that inventories consist primarily of products for resale, like merchandise, beverage, and food. The accounting policy they use for their inventory is that inventory is reported at a lower of cost or market value. They use the weighted average cost method overall. For our viewers who are unfamiliar with the weighted average cost method, it is when a company divides the cost of goods available for sale by the number of units available for sale, which yields the weighted average cost per unit. All right, now we'll head back to Erica, who will detail the intangible assets of accounting and accounting policies they use. Erica?
Thanks, Mitch. SeaWorld's 10K showed us that their intangible assets are worth $27,843,000. These assets consist primarily of certain trade names, relationships with ticket resellers, a favorable lease asset, and a non-compete agreement. This is all amortized on a straight line basis. Now back to Bridget with more information on SeaWorld's notes to financial statements.
Thanks, Erica. We looked into the cost of the property and equipment and found that as of December 2013, the total cost was $1.7 million. That's with less accumulated depreciation of $714,305. Furthermore, we also looked into SeaWorld's total prepaid expenses and other current assets, which showed us a value of $19,613.
This is all very interesting and an overall very exciting episode in investigative accounting journalism. Sadly, folks, that's all the time we have left for tonight. But tune in next week for another heart-pounding episode of investigative accounting journalism. Once again, we're Net Income and
Stay classy, Accounting 205.
That was good.
Awesome.